Hi, everyone. Welcome to Making the Stock Market Work for All of Us. I'm hosting this fantastic panel today with the two co-founders of Public. Do you guys want to say hello to the crowd?
Hey, what's up? I'm Leif.
Leif and Jannick. Leif,
hi.
Jannick, you want to say
Jannick.
hi? So they are tech visionaries. They founded the company last year, and basically they are democratizing investing. And I'm going to let them jump right into it. Tell us who they are a little briefly and talk about Public. Who wants to kick it off? Leif?
You go for it, Jannick.
Okay.
Cool. So, Public is the social investing app. So we make the stock market social and allow people to have what you could call almost like a multiplayer experience, if you will, of the stock market. We started it last year, and so or we launched it last year, and so have been growing pretty quickly since then, and enjoyed the journey so far. I founded a fintech company previously called Tradable. Leif was the founder of a company called and.co, which is sold to Fiverr, which is also now a public company. And known each other for way back from like the New York tech scene in the early days.
Okay, great. Leif?
Yep, I mean, Jannick kind of introduced it already, right? So, by the way, I'm originally German. Jannick is Danish. He's sitting in Copenhagen office right now, so it's a little bit later for him in the day. Exactly. I think, like, just as an intro to Public, right? One big thing that we've really realized is that one of the main issues why people don't start investing in the stock market has really been financial literacy. And so the social layer that we've built around the stock market, really just enabling this like bite-sized kind of snippets of information that you can get while you're kind of active in the markets, and that really creating like helping you to build your financial literacy over time, by experiencing the stock market together with others, and therefore also just getting more diverse opinions, getting different viewpoints on why people invest in a certain company, why not. And so on Public, you can basically follow people, right? So you can see my little URL over here. All right, so you can see my little profile. Always trying to grow some users, and so what's really just really interesting there is that, hey, you can follow certain people, you can join chat groups with others to kind of discuss the companies to invest in, as well as just investing principles in general, and how to invest in the stock market. And so about 90% of our users are new to the stock market. And so it's really just a great way for people to kind of get their feet wet. And
it's almost like a peer-to-peer relationship. I'm interested in Amazon. Let me jump on this platform and see who else is there, trade ideas. No?
Yep.
Okay. So when Public went live last year, it was branded as, quote, a whole new way to invest. What is that way? Can you explain?
Yeah, so I think it has to do, I think most experiences that people have had with investing or finance at large has been these kind of isolated experience where it's like you and your charts and your numbers. And I think the reason why a lot of people have not been participating in the markets historically has been that they've been intimidated by it to some degree, not necessarily knowing. It's been a little bit of a daunting process maybe to build a solid portfolio, or even to find out what a solid portfolio actually is in the first place. And so the social layer that we sort of built with Public really helps sort of get people involved, right? And so we have these kind of two concepts that feed off each other in the nice way. One is what we call a real-time fractional investing, or slices. So you can buy a slice of a company, even if it's trading at thousands of dollars per share. You can basically buy any stock for any amount of money. And then the second one is to Leif's point, the social layer that really lets people kind of collaborate, to your point, either with friends or just with like-minded investors. You can follow domain experts, sort of thought leaders within different industries, to really get more diversity of thought into your research process as you sort of plan out and execute your investments in the equities markets.
Okay. So 1 year ago, it was billed as a, quote, whole new way to invest. You've been at it just about a year, a little more than a year. Has this mantra changed? It's still a great new way to invest, but how are you driving this message home? What makes it new even today, a year after your launch?
I would say, so one big thing around the stock market has been that it has been a very kind of brewery experience, right? So if you think of the culture that has been built around the stock market, it has been very much led by, even in our case, not like white males. And and if you look at the communities that have been built around the stock market online, it's just very driven by options traders, by people who kind of want to day trade and so on. And there hasn't been really good communities that are so to say inclusive for people, where you can actually really build your financial literacy and have kind of like more deeper discussions about companies and investing. And so, and that's really kind of like a hole that we've really clearly saw. And so one big thing for us is yes, we are a social media product on the one side, but that is only as good as the community that sits within it. And so we're doing a lot of work to make sure that we're building a truly inclusive investing experience and like a community that really supports that. And so that falls into how we acquire users, right? Who actually joins the app, what kind of features you have within the app, and and these things kind of feed off each other. And so on public, for example, we don't allow day trading. That's just one kind of thing that's has been a principle of ours in the like from the get-go. Then on the other hand, also we just introduced safety labels on certain stocks. So stocks that the SEC deems as potentially risky or more risky than other stocks. For example, small companies with a low market cap that can be very volatile, or specialized ETFs, or even, for example, at these times right now, you still have companies that are still publicly traded, even though they are actually bankrupt, right? So Hertz, for example. And so we introduced these safety labels, to basically create these speed bumps, in the experience, to kind of add friction at certain moments, to make sure that people who are new to the markets have kind of like a place, are basically like educated as they experience the markets. And that's just something that we have been very kind of focused on, to make sure that, we build also not just a community that kind of supports each other, but also put them into a place where, they're not necessarily gonna gonna be burned out quickly, because the first experience they might have with the stock market was buying some penny stock and, they lost some money on it and so on. So that's just something we're trying to facilitate. Especially as we're bringing more people, like more new people to the stock market, where we might be the first investment account they ever had.
Yeah, so that's great. So two things I picked up right there: acquiring new people, new voices, new thoughts from potential investors, and inclusivity. So you've got acquisition and inclusivity. These aren't words you hear in the mainstream investing world. And I think that's very key to your growth. It's been exponential to some extent, particularly during a pandemic where people are paying more attention to certain things, i.e. their money and the change in their pocket. And rather than let it sit down, they're throwing it on public and saying, okay, I've got this number of shares in McDonald's. I wish I could buy Amazon. Could you speak a little bit about the democratization of this? Because you mentioned inclusion, and this is key, because as someone that's covered global markets, particularly investing and asset management for more than a decade, inclusion doesn't come up in the lingo. When you're talking to hedge fund manager X or asset manager Y, be it in Hong Kong, Frankfurt, New York, London, Singapore, that's not what they're thinking about. People want to hit the bid and they just want people to pile in. How has public democratized it? And what do you say to someone that really wants to buy into Apple or Amazon, but doesn't think their $100 is enough?
I think there are a couple of things there, right? So so first off, it's like a conceptual framework. Many people, when they talk about democratizing something, especially also like democratizing the stock market, what people then connect it to is purely access, aka give all the tools to everyone and then everything is going to be great, right? But I think the truth is that at the end of the day, just giving access to something that is not necessarily democratization. Democratization is, you have to make sure that people get the right education around it, that that you're creating an inclusive culture where they can actually learn it, and therefore it's much more about not just making it accessible, but making it approachable, and that approachability, so to say, is much more than just making tools available, because if you give options trading with basically margin loans to just anyone without any education, that will likely be very, very risky, and could end up being bad and literally put people into debt. And so that's the kind of stuff that's just you like where it's not necessarily democratization anymore. And So I think that is just like an underlying thing where you have to think about differently and you have to take some responsibility, and therefore to design the experience, to democratize it like for that. And I think one big thing around it, yes, the safety labels that we've done, but I think also the angle of just fractional investing is like another piece of it, right? So just making everyone equal, and that the person with $100 portfolio could literally own the same companies as a person with $100,000 portfolio, and just kind of making everyone equal from that experience, to begin with, I think is like an obvious kind of execution of that.
Jannick, do you want to add to anything to that?
Yeah, I mean, I think Leif kind of said most of it, but I think there is an increasingly bigger difference in whether people sort of say that have not been involved in the stock market before wants to just start trading, or whether they want to learn to really invest. And I think those two concepts, you're seeing those become two different things. I think historically maybe they've been lumped together, and people haven't really been able to figure out what, because you've always either had sort of your active traders, right? If you look at most of the incumbents in the space, is either have the active traders, you're fully active, you're day trading, you're kind of having all those tools that Leif talked about, or you're passive, i.e. you give your money to someone else and they manage it and you never look at it, but then you also don't necessarily learn anything, right? And I think we've seen the opportunity to build with Public is a mixed version of that, or something that sits in the middle, where it's really regular people that can learn how to, and not day trade, but how to really invest and actually build up their knowledge at the same time. And again, you can kind of think of it like, you can learn by doing in anything in life. That goes for the stock market as well. Unfortunately for the stock market, if you learn from failures, it also means you typically lost money.
And other people's money as well, right?
If you're a fund manager, sure, right? But I think in our case, when we add, that's exactly why we added the social layer to it. So you're not just learning from your own experiences, but from other people's experiences as well. And that really accelerates the time in which you can build your financial literacy and lets you sort of become more proficient a lot quicker.
Okay. So I've been reading about you guys for a year. You don't strike me as a trend or a fad. You strike me as something sustainable that even 5 years from now, an up and coming investor can say, you know what, let me give this a try. How are you attacking sustainability? And also, how do you get people on the platform? It's not just marketing, right? You've got some very famous names behind you, backing you both financially and publicly through your advisory boards. What was the reaction when you walked into the room and put the idea in front of Will Smith, for example?
So I think, again, the half of the US is not investing in the stock market, not even through a 401k or anything, right? And so I think if you truly democratize the stock market and you open it up for everyone, that also means that, in order to truly do it, you have to create an inclusive experience out of it. And especially if you're building it as a social network like we do. And so I think with that in mind, it was also important for us that we basically get some people involved and some sort of say figureheads that kind of, show also I like the type of figurehead that shows the type of diverse community we're actually trying to build. And that's, I think, what's why it was important for us to kind of get some of these folks involved.
Jannick, do you want to chime in on that? Or I'm sure you were in those meetings too, right?
Of course. I mean, I think it's the culture that has existed around the stock market has been like this sort of a little bit closed doors culture. And so for that reason, I think there's also been a taboo around money. And so that people didn't necessarily feel comfortable kind of talking about it, right? And I think that's the change in behavior that you're seeing, especially with maybe also more the millennial generation and even more so sort of the Gen Z generation, of course. But I think there's a number of underlying trends that have been kind of pointing in this kind of direction for a long time. And so that's also kind of when we looked at it and really thought that, this is something that has to exist in the world, because we think that the time is right to be able to basically have the same social interactions around money in general as you have with anything else in life, because ultimately dialogue is how you most sort of how you improve yourself the best way. And I think it's been especially true in the last kind of couple of months, not just for financial stuff, but in general.
Yeah, I think dialogue is key because, you know, everyone may want to pile into Amazon. They're taking the long-term view, but getting on public, you're able to connect with others that are also interested in Amazon. And it's just diverse perspectives. It's not one fund manager saying, this is good for you, this is good for you, this is not. On public, from what I understand, there are many voices chiming in that you can connect with, exchange ideas with. So I think that, to me, as someone on the outside looking in that doesn't manage money, that's a trend of sustainability because there's a constant back and forth, AKA that dialogue, right?
And I think it's, sorry.
Go ahead. I'm sorry.
And I think that's that's really it in the sense of that, like, this same, like, you know, building a diverse portfolio, you know, might make your portfolio less risky. It's basically getting a diverse set of insights, you know, around your, you know, like around your investments and your investment principles, you know, creates stronger financial literacy for you, and therefore potentially, you know, more well-informed, you know, decisions. And I think that's really where it becomes so important, right? So we had this one, to give you two quick examples, right? We had one example on the app where one of the more experienced users saw other users invest in like specialized ETFs, which can be risky, where, you know, if you keep your money in, you might, you know, lose some money on it, things like that. And so he actually started this thread where he explained the different types of ETFs to the community, because he saw other people do it, and he just, you know, took it onto himself to be like, yo, I'm going to explain this to people because maybe they're not sure what they're doing there, right? And so I think that's the kind of thing that you would, you know, that the social layer really suddenly enables. You wouldn't get that, you know, if you're just alone with your charts and numbers.
Yeah.
Another example.
You also wouldn't get that with a high-priced fund manager where you have to make an appointment, go in there, and inadvertently be sold something that you may not need or want at that time, right? People charge a premium for their research and they want to sell it ultimately. They don't just want to give you advice and send you on your way. They want you to come back. That's their call to action, right?
Yeah, and it goes back for you to learn yourself versus just having someone else do it for you.
Yeah.
And but yeah.
So
exactly.
Jannick, to circle back on what you said, millennial, Gen X generation, dialogue, talk us through it. I want to invest. I've heard so much about public, from A to B to C. What do I do? Let's say I'm sitting at my desk and I decide, okay, here's $200, $300. I want a piece of Apple and Amazon. This is a very mobile generation. We're all connected, if anything, a little too connected. How do I start?
So you go on the App Store or the Google Play Store, you download the app. You can also go to public.com. Of course, and kind of go from there. You set up an account. The interesting thing so when you set up an account, we are a fully regulated broker-dealer nationwide, and so there is some information that we are required to obtain, including like your social security number, your address. We actually have to identify every single customer in the brokerage shop, so to say. But the interesting thing about that is it also means that the community becomes one where every single member is verified, right? Yeah. And that in a social experiment is quite interesting in and of itself, because I think what you've seen on the internet historically is a lot of anonymous kind of forum style things, whether it be like even on Facebook, you know.
Basically, it's not Reddit, right?
Who people are. Exactly, right. And I think one thing that's been super interesting for us to see is when every single member of the community is verified, and we verify their identity, the entire vibe within the community is very, very different. It's way more constructive. We don't really have trolling of things like this, right? Because these are real people making real decisions financially and making real investments and talking to other folks about it. And I think that's really where sort of the beauty lies. And that's from the social side, I think has been the biggest experiment and definitely to date a very successful one.
That's great. Okay, we've got a few seconds left. Last question before we say goodbye. You're a year old. You've been friends for years, in tech for ages. Do you consider yourself the new disruptors in the space? Yes or no? Are you disrupting traditional investing or no? Would you go that far?
I think the interesting thing is we are probably more growing the market than we're like taking customers from any particular company right now. That's
like bringing more people into the capital markets.
I mean, 90% of the folks on public like have little to no investing experience. The sort of community is almost 50-50 in terms of gender. And I think that really means that really kind of shows that it's a new thing, and so we're not necessarily taking customers from anyone else. But I think in the era of mobile and the internet, there's no reason everyone couldn't be an investor.
Okay.
So that's
so you don't think public is a threat to the high net worth money managers at, say, Schwab or Citi? No, right? Not yet, at least.
Not yet.
We'll see. That's a function of time more than anything else, maybe.
Okay. That's great. Okay, any parting words, Leif? I know it's late where you are, so I'll let you go first.
Jannick, hey, thanks so much. It was fun.
Okay.
Yeah, definitely great to come on here.
Oh, so it looks like we actually have another minute. So one more thing. I was reading about you guys earlier this year, the middle of a global pandemic. What made you guys launch a new product in tech as markets were crashing during the COVID-19 crisis, and they still are to some extent? You guys launched this really cool messaging app. How has that worked for you guys so far?
Yeah, so the reception on that has been phenomenal, I think, and precisely because of the fact that in times of great uncertainty, you really want to connect with people even more. And so launching messaging really allowed people to connect in a whole different way on the platform. I think the uptake has kind of spoken for itself.
Oh, really?
It's really a way to, again, have much more real-time conversations and basically a way to cover and make sense of everything that's kind of happening in the world, which is very hard to do if it's like you on your own. For
sure. So it's not just a coronavirus bump. It's real. It's there, right? It's happening.
Yeah, absolutely.
Maintaining its space. Leif, did you want to add to that?
Yeah, I mean, today is the Netflix earnings call. We have this little chat open where people discuss the Netflix earnings call.
Okay.
So if anyone wants to join that, just go on public and check it out.
Public.com. Download it in the App Store and Android and get it done today, correct? So what's the minimum buy-in? Can I log in with $50, $100? $1. So there you go. It is democratization. $1 and you own a tiny, tiny bit of Amazon.com or your favorite stock. And it's not all tech. McDonald's is there. Spotify is there. Correct?
Absolutely. Yes.
Okay. Okay, guys, thank you so much for this. This has been amazing. I wish you both a ton of luck. And I, too, am a new fan of you guys. And I will be downloading your app today.
Awesome.
Nice.
Okay, great. Everyone follow Public on social.